Hey everyone, this is Finance Meets Real Estate. So we meet here every Tuesday, 6:30 p.m. Eastern Time. We have amazing guests here every week. So this week we are having Steven Pesavento. So he's the founder of Von Finch Capital. And so he's going to talk about the investor mindset. It's also a podcast that Steven hosts. So he has been investing since 2016, has completed over 200 transactions, renovated nearly 100 houses, and transacted over $180 million in investment in real estate. So Steven's investors have entrusted him with over 30 million of capital, delivering solid returns. So he's also a high-performance coach, former management consultant for Fortune 500 companies, and he brings his process improvement, marketing, sales experiences to real estate projects. So he's a host of Investor Mindset podcast, and also where he interviews incredible guests. And yeah, so he likes has a few different hobbies. He can share them with us. And yeah, with that, I'm gonna pass it on to Steven. And yeah, if you guys have any questions, feel free to speak up or put your questions in the chat. We're gonna do a relatively open format.
Well,
so
thank you.
as well.
Thank you so much for the introduction. I appreciate it. I'm excited to be here, and let's definitely dive in. So again, my name's Steven Pesavento, and today we're going to be talking about the success secrets of the investor mindset, building a business with intention. Whether you're a passive investor or you're an active operator, you're going to get value from today's presentation. I want to make it interactive. So if you have questions, I'm going to be looking at and watching the chat and, for those questions to be able to answer them, and we'll dive right in. So, a really important question is, what do those who are wealthy have in common? Well, it's pretty simple. They didn't earn their way to being rich and wealthy. They leveraged their earned income, investing in assets to create equity and cash flow. Of course, as you heard during the introduction, my name is Steven Pesavento. I'm the host of the Investor Mindset podcast, one of the top investing and business podcasts on all podcasts. Been operating that show for 300-400 episodes. For over 3 years. And I also am the managing partner and founder of Von Finch Capital, right? Avid snowboarder and kiteboarder, been operating Von Finch since 2016. I first got into real estate all the way back in 2014, doing early Airbnb before it became the behemoth that is today. I flipped and bought and sold over 200 single family homes, have raised over $40 million, have purchased over 10 large institutional style multifamily projects. We've gone full cycle on a couple of those projects and have some significant assets under management. If you're interested in getting involved with what we do at Von Finch, you can head over to investormindset.com/invest. A little bit about Von Finch Capital before I get into some very helpful things that you're going to want to know when it comes to how to think about investing and how these things apply. I want to share with you a little bit about where I've come from and what I've experienced and what our companies focus on, where a lot of these lessons have actually come to play in our own investing career. So at Von Finch, the meaning behind Von Finch, it actually means something bigger than oneself. So from day one, the intention behind what we do at Von Finch Capital has always been around making an impact for and with our clients. We're an investment manager and sponsor. We specialize in value add multifamily, and where our true advantage is financial ingenuity that's really targeted to preserve investor capital and create outsized returns. So what does that really mean? That means going out and understanding how to put together unique deals and deal structures that end up protecting investors and putting us in a much better position to have more control and authority over what's happening, or to be purchasing assets that frankly are going to have a better risk-adjusted return. And we do that better than anyone else because we're nimble, we're focused, we're experienced. We're a small, agile company who's able to change to the market environment. We may talk about what some of that looks like here during kind of the later part of today's presentation, but our experience, been doing this for nearly a decade. have put together a phenomenal team of some true experts, and I learn from them along the way, just as I'm sharing my lessons with them and able to share them with you. So, of course, got a great chief investment officer we've been able to bring on who has an institutional background. He really manages and runs the day-to-day operations of these individual assets and the investments that we manage. He worked at AEW, one of the largest real estate capital management platforms in the business. And again, from a history standpoint, we've done some significant transaction volume, both as an investment manager, and as a sponsor. So when it comes to the perspective of what you're going to be learning today and what that's going to look like, you want to sit down and get ready to take some note and make note about what kind of actions you can take and what kind of lessons you can learn and how you can actually apply those directly in your life, in your business, and in your investment portfolio. Because today you're going to learn how successful people think so that you can create cash flow and long-term wealth all through real estate and having the investor mindset, right? So we hear mindset thrown around a lot. We hear a lot of people talk about mindset. We hear people have saying, hey, it's important to have the right mindset, but what is mindset really? Well, mindset is the thoughts and beliefs that we hold that lead directly to the actions we take and therefore the outcomes we experience. So what's incredible about this is that by changing those thoughts, we can actually change what we do and therefore the outcome that we are manifesting within our world. And that is what ends up leading towards much more success or people quitting, failing, or giving up along the way. And the truth is, mindset is the foundation. You can't build a great property without building it first on a solid foundation, but mindset is not a silver bullet. Without the tactics and strategies that go into operating and running real estate investments, or without understanding some of the key pieces about how to choose a passive investment to create your portfolio, you will fail. Without having that foundation, you might get lucky from time to time, but you're going to need to know exactly how those tactics fit in. And what we first do is we lay out what are those thoughts and beliefs that are actually going to help support us. So what that really comes down to at the end is mindset plus strategy equals success. So let's get into what are some of these 5 success principles of the investor mindset, and how you actually get started is you start studying what works. You study other successful people. You study people like myself, like many other operators out there who are winning, who are succeeding. And those people, if they were intelligent, the fastest path they led to success was finding other people who were already on that path. So I commend all of you who are here live, taking in these concepts. Those of you who are watching on YouTube, I hope that you're taking notes, because it's only through hearing this information and then actually taking action on it that we can make real change happen. And I want to let you know that as we're going through some of these examples, these might be things, I hope these are things that you have heard many a time before, but I challenge you today to look at this information from a perspective of how can I apply this in my life, in my business, and in my investment portfolio today. Every time I share this information, I'm reminded about ways that I can apply it within my business. And again, we have nearly 200 million of transaction volume under our belt and significant amount of equity that we're managing for our investors. However, there's always another level. So no matter how great and successful you're doing today, this kind of information really will help take you to that next level. So what do successful investors believe and do differently? Well, the first of that is that they view challenges as opportunities. We've got a phenomenal resource, investormindset.com/success. You can grab that resource. You can download it. You can enjoy all 45 or 50 pages of lessons that we're going to be talking through today. But one of the examples that comes out is viewing challenges as opportunities. What that really means is that when bad things happen, when challenges happen, when something occurs within your world, you can look at that from a negative perspective. You can ask yourself, what can I learn from this? What's actually good about this? How can I grow here? How can this be used to my advantage? How will this define my future in a positive way that I can build off of and move forward? And they don't have to be an anchor, right? A lot of times when people fail or when they have a challenge, they look at that as an anchor, something that's going to hold them down, versus looking at that as an engine, something that's going to propel them forward. But what I've found studying hundreds of some of the most successful investors and entrepreneurs is that what they do differently is when things go wrong, they get excited because that's a new problem to solve. There's a new lesson there, and it's something that's going to end up bringing them closer to where they actually want to go. That doesn't mean that everything that is bad that happens is something that you want to happen, but it is an opportunity to know that you can grow from that, right? A great example of this is that when you're going and flipping a house, one homeowner who's looking for a property that is in perfect condition and is fully renovated and ready to move in, they look at that. That is a beautiful property. I'm personally not interested in buying a property that's in perfect condition because I happen to have the skills and abilities and teams to go in and fix properties up. So when I look at that same opportunity, the one that's at full price value without any value to be added, that's not an interest for me. I look at that property that has a challenge as something that's quite profitable. So another important piece of this is that leaders know that the past doesn't equal the future. They know that along the way, that challenges are lessons and they're motivators. That after a great challenge, successful investors, they want to understand, how can I move forward from this? And part of how that actually is going to happen is it's going to come down to shifting your identity. Because for many of us, when we have some kind of challenge, maybe we launch a new project and it doesn't go quite as well, or we've closed a project and the profit wasn't quite where we want it to be, or there's some kind of issue with construction, we can be in that state and we can live in that state of negativity for as long as we choose to. But the more quickly we can shift our thinking, shift our identity, the faster that we can start to be a successful investor. And when I talk about identity, it's really important that we could spend a whole hour just on this concept of changing your identity. But just an example of what you can do here is you're sitting down, you're listening to this conversation, we're sharing some lessons with you. If you really get to know me, you're probably going to see some stuff that Steven Pesavento does really well. And you're probably going to see some stuff that, oh, well, I'm interested in thinking like Steven would think. Or when I'm sitting down and I'm dealing with a problem, I have a handful of mentors, both people that you know and people that are more under the radar that you'd never know. But a great example is thinking through how to solve problems. And when you're in that problem solving state, I often will ask myself, well, what would Elon Musk do in this situation? I visualize myself putting on a costume of Elon Musk, putting on that cape and really stepping into him and trying to think outside of the box, thinking from this perspective of anything's possible, that if I get the right people and the right resources and we have the right timeline, that we can find a path towards solving any problem. And so there's many people in your world. One activity I would challenge you to do is to actually sit down and write down who are a lot of those people, those 3 to 5 or 10 or 15 people that you look up to that are meaningful heroes in your world. And when you can look up to those meaningful heroes, you can actually start to understand what are those characteristics that you like, that you think would be really helpful in pushing your investment portfolio or your business forward. And then when you're dealing with situations where their lessons would play well to helping you make that decision, you can actually call upon them in order to really be able to bring that forward. So if you guys haven't done that exercise, I strongly recommend you schedule 30 minutes and really sit down and at least write down 3 people and the characteristics about them. And then keep that at the top of your mind, because it's very useful to use other people's wisdom to move you forward. All right, so let's move forward a little bit faster through a couple of these. One of the other key things that successful investors do is they're ultra focused. What that means is they're not a jack of all trades. When I meet a successful investor, somebody who is making millions of dollars a year or more, they often are in a position where they're focused on one activity and they're doing that one activity really well. You know, the old saying goes, a jack of all trades, a master of none. Well, the best investors, they focus on one or two main priorities at once, and they're laser focused on those assets or those asset classes or those strategies. So for example, at Von Finch Capital, we're heavily focused on financial engineering success through real estate deals. Now, we happen to be niched down into value add multifamily, although it's easy for us to pull back and still be in our main niche of financial ingenuity. And within that value add space, we're focused on single asset deals that we go buy, operate, and manage. We bring our 1031 investors along for the ride. So if you happen to know anyone with a $200,000, $300,000, $400,000, $500,000 or higher 1031 exchange, definitely give us a call. We have some great passive investing opportunities for those. And then we bring our individual investors through our syndications into those investments. Now, on the other hand, we have a preferred equity fund where we've raised capital and we'll go and deploy that into individual opportunities and be able to get some much better terms and be able to create really a phenomenal, consistent preferred return for investors. So those are two examples of things we're focused on. We're not going out and trying to dabble in storage and dabble in industrial and dabble in ATMs and dabble here and there and everywhere. When I meet people at real estate investor events and they tell me more than 2 or 3 things and they're getting started, I immediately know that they're going to crash and burn. Now, look, I don't judge that. We've all been there. We've all been that excited dog who wants to give attention to everybody who comes into the room, right? It's exciting. There's so many different opportunities in the real estate world. But the advice I would give if you're a passive investor is really focus in on deciding what's that one strategy that you're going to learn a lot about so that you can make key decisions. Or if you're an operator, you need to be even more niche down and focused on where and how you're going to create an income and an advantage for you and for those who participate. And one of the things is that you can absolutely build focus is by really just sitting down and choosing those 1 or 2 strategies, right? So for those passive investors who are listening in, one thing I always tell people is, you know, there's a lot of folks who are making a great income. They're making a couple $100,000 a year. They've got a great family. And what they really want at the end of the day is they want that freedom, flexibility, and fun that real estate offers. They want the outcome that they think owning and managing real estate will give them. Well, for those people, you have to ask yourself, well, what's better? Is it better for me to go be an active operator and spend countless hours building up that expertise and that strategy? Or would it be better for me to sit down and focus in my career where I already have the ability, or in my business where I already have the ability to make hundreds of thousands of dollars, and to then focus that one strategy of passively investing with a handful of very strategic expert sponsors? Now, if you're on the other side of the coin, right, you want to sit down and decide what is that area of expertise that you're really good at. Here's a great example. When Von Finch started as Von Finch Homes back in 2016. After I had operated Airbnbs through arbitrage back in 2014 when I had no money. And I was making, you know, hundreds of thousands of dollars a year doing that. And then we started homes. And I found one very specific niche that I was really good at: going direct to seller, marketing, and finding opportunities. And as a result of that, we were able to buy over 200 properties in over just under 2.5 years. As a result of that, we were able to flip and renovate a significant number of homes. And I was able to bring on a great partner who had experience in that space. As we transitioned into commercial real estate, we took all the capital and trust that we had built from flipping houses, and we rolled into raising capital as a private equity fund initially for those first couple deals. Then, taking that focus, we're able to build the phenomenal team, hire institutional grade expert fund managers who could come in and execute operations and grow. And so the point is, where you're at today is not necessarily, you don't have to live there forever. but you need to focus in one area long enough to get really, really good so that you can then add significant amount of value, be paid back in return for that value, and be able to grow and expand from that. I hope that's really ringing true for you guys. If you happen to be in that position where you recognize that you have more than 3 things you're focused on, I challenge you to take action on making a change in your life today. Commit to 1 thing, maybe 2. The coaching clients that I work with that pay tens of thousands of dollars a year to work with me one-on-one, and this is not a pitch. I don't have availability. There's a long wait list, and I sincerely only work with 2 or 3 or 4 people at a time. Those people, one of the biggest things we do is usually cut scope. We usually cut focus so that they can get really good in that one area of their business, whether that be a real estate or another area. All right, moving on. So one of my favorite things to talk about is clear purpose and vision. And one of the reasons why it's so important is because when you're working with a clear purpose and vision, you're more likely to be successful because you're more likely to do the repeated action day in, day out. That's going to get you to that place of success. Going back to what we just talked about, if you focus on one thing and you do it 10 times, you're going to get 10 experiences that are going to move you closer to success. If you're focused on 3 things and you only have 10 actions to do it, you're only going to be moving a third of the way there, but you're going to be moving the ball forward in 3 different spaces. It's why you want to get focused on what you want and why you want it. And when you understand what you want and why you want it, you can be in a position where it really becomes a fueler and a driver for your success. So people always talk about why you want something. People talk about why you want something. They talk about that being an important thing. And at the end of the day, yes, it's important to be clear on why you want something. But at the end of the day, you want to live a better life. You want to have some freedom. You want to have some flexibility. You want to have some fun. You want to be happy, right? So the why is really just a clarifier so that you further can understand what it is that's actually important to you. Stephen, I might challenge you. It looks like when I'm talking, I don't know if my video is showing up. So I just want to have you take a look at that from a pin perspective.
It's working great so far.
Perfect. So when it comes to clarity, what is the most important thing? You ask why over and over again to further understand what. Okay, so what do I mean by that? What I mean by that is a great example is when I'm talking with passive investors, people who are making $1 million a year, or people who have some significant net worth. These folks who they've got some capital and they want to get involved, right? They want the outcome. They want a better life. They want the freedom. They want the flexibility. They want the fun. But there's a lot of different paths for them to get there. So when we ask that question, well, why is that important to you? Why do you care about that? Well, why does that matter? Every answer followed by why helps you further understand what. And when you further understand what, when you have a clear thesis, when you have a clear vision, when you have a clear direction, it makes it that much easier for you to decide what those individual strategies are going to be and how you're going to go about making those decisions. So a great example is, if we're thinking from a business perspective, well, who's your business going to serve, right? Who are you going to serve? If you're running a syndication business, or you're a fund manager, or you're an investment manager, or you're an investment sponsor, if you're running one of these businesses, now you could want to serve everybody. But from a focus perspective, you want to really think about like, who's that ideal client? Who is really going to get the most value from your service? And who's going to be able to be a raving fan? And who's going to be able to invest or buy from you repeatedly? So this idea of ideal client is really important. And an ideal client is a partner or a client who you can love working with. And there's someone who gets their exact needs met by your offering. So I'll tell you a story about where my business really changed is when I understood this idea of ideal client. It's the most important thing. If you're a passive investor, you're really thinking about your client as your ideal partner. So those ideal people who you're going to work with, and they're going to execute, and they're going to do those things on your behalf, right? They have to have the right values to be a good partner. From a client perspective, it really comes down to who can be somebody who can continuously buy from you. So if anyone's in the single family space, like I was for a number of years, what I noticed was that my clients, they had a huge desire to sell their house. We would buy houses from people who were in distress. We would help a lot of folks out of bad situations, and it made a huge difference, right? It was a great business. We made great money. But one of the downsides of it was that people only sell their house for 70 cents on the dollar once, right? So what I found was, as I was looking at my business and understanding how do I build a business that I want to run and manage for the next 2 decades, 3 decades, I really started thinking down, like, who do I want to work with? I want to work with people who are successful. I want to work with people who are high income earners, people who are on that path to being rich and wealthy, who have good values, who are easy to work with, who are kind, caring, and they want to live a better life. That could be somebody who happens to be a fund manager and they're building a business of going out and building relationships with investors and investing alongside Von Finch. That could be investors who have been running their business or in their career and they're making a couple $100,000 a year or a couple million, and they want to put that to work. What that's not is people who are making 50 or 100 grand. And although they might share all those values, they don't have that ability to be a repeat customer, right? So that was important to me. I really wanted to be able to build a relationship at scale and be able to work with people over and over again. That way we wouldn't have to have, 10,000 investors. We could build a great business with 1,000 or maybe 5, right? We're at about 100 and we've got a phenomenal business now. But as we keep growing, you see kind of a compounding effect when you have clients that can continue to build. So it all starts here. It really comes down to getting clear on what you want and why you want it. It fuels everything. It's the most important piece. Of course, we're here because we're talking about real estate. So we know about number 4. So I'll touch on it briefly. And what that really comes down to is investing in assets. And when I talk about assets, I'm talking about real estate property, of course. I'm talking about brand, trust, and recognition. I'm talking about different channels that you own where you've got opportunities for that to generate income and revenue for your business. I'm talking about lists. I'm talking about money-making systems and processes. I'm talking about networks and connections. I'm talking about investing in yourself. Like you yourself, your number one asset. Today, you showed up to this presentation, and this is a free presentation. So you're not trading money for the lessons learned, but what you are is you're trading your attention. You're trading your time. So you're paying with your time, you're paying with your attention. And by showing up and doing that, you're being able to build up a skill. You're being able to either take a lesson away, get motivated to take some action, or maybe get inspired to invest and start moving your money in a way that's going to create that legacy and freedom for your family. So what I really recommend is really sitting down and getting clear on who you want to help and who can help you. This whole idea of who, not how, right? Dan Sullivan came out with a great book. It's something we've been espousing for many years. But when you can get really clear on who can help get you there, that's where you're going to end up seeing lots of success. So a great example of that, it comes down to leveraging expert partners, expert coaches, and expert mentors. Those are people in your life who can really help you succeed at a next level, and they can accelerate your learning. So what's the difference between a coach versus a mentor? Somebody who has a strong understanding about how to get the most out of people. They may not have been down that path themselves, but they know how to help other people get down that path. A mentor is someone who's already been down that path. You're going to simply step in their footsteps, and you're going to avoid tripping over the potholes or dealing with the kind of challenges that would come along the way. Now, you often can find great coaches who are also mentors, people who've been in the trenches, who've been through things. I've got a number of different coaches in my life, from health to wealth to personal finance to my mindset to my business to a variety of different places in between. So I invest heavily in coaching because I absolutely believe in it. I got great mentors. I've got great people on my board. I've got great passive investors who are on our advisory committee who help make key decisions on the investments that we're interested in moving forward. These are all things that you as a person can invest in as well. Now, the power of partnership is where you align your interest with somebody else, one of those experts, and they go out and they execute either alongside you or on your behalf. This can be a great way to build a business or to build your investment portfolio, because what happens is that you have an alignment of interest. That value exchange is in alignment, where when you win and only after you win, they win. So you can see this in hiring great salespeople and paying them purely based on commission. The best salespeople, they want to be paid based purely on commission, because they understand that if they believe in your product and service and your ability to deliver, they want the most upside, because they understand sales is a challenge. They're going to bring that to the table. Now, in the real estate investing world and the syndication world, our partners, our LP, limited partner passive investors, they're getting 60 to 80% often of the profit on these deals, right? They're getting majority of the profit. We're going to go out and execute, but without their capital, the size of our portfolio would be limited. So we're willing to grow our portfolio in order to create more diversification internally and for them. And it ends up leading to a very good position to be in that kind of alignment. So what does this all lead to? What it really leads to is creating a successful life by investing with intention. And that's what the investor mindset is all about. So I want to get in and answer some questions and share a few things. We've got some amazing projects and some amazing resources. If you haven't already, I encourage you to click over on Spotify or Apple and subscribe to the Investor Mindset podcast. Go over on YouTube, subscribe, or follow me on Instagram at Steven.Pesavento. And happy to open it up for some questions, talk about a little bit of what we're doing, or anything else that would help to add value to the community.
Awesome. That was really great. Thanks, Ivan. And actually, just because you mentioned like one of the pieces there with regards to focus, let's say like outer focus, like the number two component that you had, right? So like, what is the piece? What is that piece for you? Like, what is the piece that you focus on?
What's the piece that I focus on specifically when it comes to my business?
Yeah. Mm-hmm.
Well, in my business, I am the maestro. I am the person who pulls together all the pieces. I'm the person with the vision, with the drive, with the relationships to go out and find those key employees, those key team members, those key partners, and bring those people together around a shared vision, pay them a salary, motivate them and incentivize them with upside, and go out and find really great partners who can help make that happen. An example of a great partner is a fund manager, somebody who is going out and raising tens of millions of dollars a year, and they're interested in investing their capital with Von Finch. Another example might be of a partner might be a debt broker or equity broker, somebody who has relationships with great deals, and they happen to know about those, and we're able to get access to those deals before anybody else as a result. So that's where I focus my effort and energy, what I'm the best at, my core skill set. And I challenge you guys to all sit down and really ask this question: what are you the best at? What I'm the best at is building relationships and trust at scale. And I'm a phenomenal speaker and marketer. And the reason I'm able to build trust at scale is because I can take very complex topics and I can make them really simple. I can be both logical and warm, right? I have that ability to build that relationship and pull people in. And by bringing on phenomenal people around me who are excellent at making sure that every promise I make, I can keep, I can continue to be confident going out there to find great opportunities and continue to push the limits. Because deep down, compared to some people, I'm super conservative. Like in this market right now, I'm focused on downside protection and really wanting to be in that great spot. However, I still am an eternal optimist. I always believe there's an opportunity to keep growing. And so as a result, what that does is it allows other people to want to rally around me, to want to work with me, to want to be a partner, to want to be on the team. And that's really what I'm great at. And so that's where my focus has been. Stepping one step a higher level than that. As I mentioned, when we entered the multifamily space, I thought that one of the skill sets that I would be able to leverage, where my focus area would be on acquisitions of property, right? There's really three areas in a multifamily syndication. It's finding the deal, operating the deal, and putting together the capital. There's more to it, but that's a simplified version. When I started, I thought I know how to go direct to seller. I have been sending 100,000 mailers a month for years. I have bought over 200 properties from individual homeowners, not buying a single property from a real estate agent until I bought my own personal home. So with that kind of idea in mind, I thought that my expertise would be going out and finding deals. What I realized was after I stepped into the market, that by focusing on the private equity side of the equation for the first 6 to 12 months, we were able to leverage all of that existing capital that we had from the house flipping portfolio and exiting all those properties to then attract great investors and partners. Some of you guys might be partners, LP partners with me as it is right now. And where that's led us to is allowing that focus on the capital side of the equation to end up being this foundational piece that we could build the rest of the business on, that we could build the acquisitions, we could build the asset management, because having the money is key, but you have to know how to manage the money. You have to know how to do the due diligence. You have to know what a really great deal is. So by becoming an expert in that space and leveraging and creating that skill set there, we're then able to recruit talent that would allow us to be able to scale much more quickly on the operational side and to be able to grow into the company that you now see today.
Mm-hmm. So, and in terms of like, so the capital raising, now you mentioned like a few different routes for that. So you mentioned potentially even partnering with fund managers in some case. Like, are those like family offices or are they other like private equity funds and so forth? And like typically, like, I guess now, like the company that you're running now compared to when you guys started in multifamily, like do you see a shift from like retail investors towards more institutional capital or like sort of semi-institutional like mid-range funds and so forth? Like what is your kind of capital, high level capital structure in that sense?
So we're at that point where we are starting to attract some more of that institutional or quasi-institutional money, some of those family offices that are a little bit more sophisticated. They're looking for that track record. We're starting to attract a lot more of that money. Now it takes time. They want to continue to watch and observe what you're doing. Our business has really been built around the retail investor, around what often people will call high net worth investors, or potentially people might call that country club money, where it really comes from a network effect. You know me, you know 10 people, you tell your friend about the results that have happened, and we've grown fairly organically as a result. So that's really been kind of that core piece for us. As we continue to grow our business, we obviously will be focused on attracting other check writers who are writing larger checks. Now, about 95% of our capital comes from individual investors that we know, like, and trust, but the other 5% comes from fund managers or groups that are managing money, and they're investing into our offerings and they're partnering with us. They're getting maybe a preferred set of terms because they're investing millions of dollars. And as a result, they're able to create value for their investors and they're able to create value for us. So that's been part of the dynamic change and shift and growth that we've seen.
Mm-hmm. Now, in terms of like those individual investors, so how much of your, I would say, like online assets have helped you in that regard, in terms of like you run a very successful podcast. So that has that been instrumental more at the beginning, and then it becomes sort of a word of mouth where investors refer each other, or is it still instrumental?
I think that more of our business comes from referral because we've done a really great job for our investors. However, what I will say is that having a great podcast and digital presence, what that's done is it's created a tool for us to build trust at scale. If you guys are passive investors and you're listening to this, you might stumble on and hear about what we're doing. You might research us, and then you might end up listening to 10, 20, 50 episodes of the Investor Mindset podcast, getting to know me, getting to know my values, and therefore getting to know what the company's values are and see that progression. And so it's been a great tool for building trust and allowing us to move more quickly during that relationship building phase while we're talking to folks.
Mm-hmm. Okay, so to open up kind of the floor, so do you guys have any questions? I just wanna make sure I'm not cutting in on everyone else.
Well, what I would love to say to folks is it's been great having an opportunity to serve you today. I'd love to give you a couple resources that I think will make a huge impact. One of them is the Passive Investor Playbook. It's a 52-page resource, which we're actually turning into a full-blown book, which will come out in the near term here. But this great resource really dives into the details of passive investing. I think it'll be a great resource for you to understand if you're at that new stage, or maybe just want to understand a little bit more about some of our values and what we're focused on. The other resource that I'd love to be able to share with you guys is the 5 success principles. Again, we talked a little bit about that. That's kind of summarizing some of the conversation we've had today. So you can head over to investormindset.com/success to pick that up and to be able to go get a copy of that yourself. Enjoy it. We put that together. A lot of folks have gotten a lot of value from it, and we're absolutely grateful to, be able to go out and learn lessons, then be able to share them back. But it's been great being able to be on here with you this evening, and to be able to dive into some of these things with you tonight.
Mm-hmm. Yeah, thanks, Steven. And if you're okay on time, like we have a couple of questions on the chat.
Great.
Yeah, great. Like, so Mark is asking, so do you prefer or utilize more accredited investors? How to attain accreditation?
Yeah. So at the end of the day, Von Finch, we have a fairly large online presence. So I would say we invite non-accredited investors to register and apply to work with us, because about once or twice a year, we open up an opportunity for our friends and family, which include a number of non-accredited investors. So if you're non-accredited, please still register and, start building that relationship so you can get involved. But 90% of our deals are focused on accredited investors. And the way that you become accredited is you either make over $200,000 a year if you're single, over $300,000 a year if you're married, or you have a combined net worth of over $1 million, excluding your personal residence. So if you don't fit that, sorry, you're not accredited. But it's something that you can look forward to working towards. But our primary client are accredited investors, those folks who can invest $100,000 to $200,000 a year continuously. And what I would recommend is, obviously, if you're not earning that kind of money, your focus really needs to be on earning more money. It needs to not be on investing. Investing is a great tool to build wealth, but you want to be building a business or creating a career that's going to be able to get you down that path, if that's important to you, right? If that's important to you, right? I see another question here, which I'd love to be able to spend some time on, which is, what opportunities can we utilize for the incoming recession? And if there will be a recession, if assuming that there's a recession, I think this person is trying to say. So, it's a very interesting time in the market today. We're in a position where we are seeing interest rates rising, and we're seeing loan to values decreasing. What does that end up looking like? What does that end up doing to the real estate market? Well, it ends up making the cost of capital go up and the returns on capital go down. So the Fed is in a position where They've created so much money. Inflation is rampant. We're dealing with 8, 9, 10% inflation, depending on how you look at it. The last read was 8.5% from CPI in July, according to the Wall Street Journal. Many people would argue that it's much higher than that when you calculate out what people are paying, how much rents have gone up, things like that. So we're seeing high inflation. The Fed is working on reducing inflation by raising interest rates. So what we're seeing is this environment where if you're sitting on cash, you're burning money. You're literally just burning money. If we agree that it's only 8.5%, which I think it's higher, I'd prefer to call it 10, maybe even 15. But if we call it 8.5%, that means on $100,000, you're losing $8,500 a year in spending value. Or let's use bigger numbers. If you've got $1 million, you're losing $85,000 a year, right? Pretty big impact to your ability to spend. So what you want to do is you want to find opportunities that can be recession resistant. Multifamily is a great example. Anything that's a real asset during times of economic uncertainty and recession, commodities and things that people absolutely need are great to invest in. That's why you see people investing in gold or silver or in hard assets like real estate. One of the benefits of multifamily is that as inflation goes up, the rent rises alongside of it and your value of your property rises alongside that. So you've got a nice hedge built in with inflation. Now, what we're seeing in the market as a result of rising interest rates and a reduction in loan to value is that the same deal that we put out 6 or 12 months ago, that was a 17% return, that same deal that maybe had an 8% cash flow projection over the life of the project, that same deal with today's debt on it and 60% loan to value is probably going to be a 14% IRR, maybe a 15. And that 8% cash flow is probably going to be like a 4, maybe a 5, maybe a 6. Why is that? Well, for two reasons. One, if interest rates have gone up, that means you've got to pay more to the bank every single month or every single year. Second is if loan to values have gone down, you need more equity, right? You need more equity in order to fund that deal, 40% equity instead of 30 or 25. And as a result of that, the returns that are available, the cash flow is actually split between more dollars, right? So the returns are coming down. So it's important to reset your expectations and understanding. If you were looking at deals 6 months ago, throw out those expectations. We're in a new market. We're in a new environment. Today's market environment, this is how it is. That doesn't mean we shouldn't invest because remember, we're losing 8 to 15% of our value if it's just sitting in the bank, losing value from inflation. So what we want to do is we want to go out and find opportunities that have a good risk-adjusted return. So what we've gone out and done in particular is we've thought to ourselves, well, okay, well, how are some ways that we can reduce risk when it comes to investing in real estate? Well, we could invest as debt. And one of the things that you're going to notice is that debt has a lower interest rate than equity. We could invest as preferred equity, and preferred equity has a lower return than, say, common equity, but it has a nice benefit of both. So, because this question came up, I'd love to just kind of walk through a little overview of what preferred equity is. And what preferred equity is it's really a hybrid investment structure between debt and equity. And that hybrid investment structure provides downside protection and preferred returns to investors. So said differently, the benefit of preferred equity is that typically investors get a return of capital and a return on capital immediately after all debt is paid off, but before the common equity gets paid off. So what does that mean? If we look at this capital stack, 65% loan to value, debt is at 48%. The middle 15% of the capital stack is pref equity. That's a total of an 80% loan to value, and that's at a 6 to 12% rate. Most pref equity is on the lower side of that, but with special structuring and good negotiation, large funds can often get higher than that. And then of course you have common equity on the top. So the benefit of preferred equity is that you're at a lower risk investment compared to traditional common equity. Well, I'll tell you why. The real reason why is because that common equity, which granted, we do common equity. We love common equity. That's been the 10 deals that we've done in multifamily, and all the deals that we've done in single family have all been common equity focused deals. So it's a great spot to be. But if you lose value, you're in that first loss position. You're going to lose your principal first if you're in common equity. So it creates a really attractive risk adjusted return, which is great in today's economic environment. So that's a little thing about preferred equity. Now, let's look at kind of a comparison between preferred equity and common equity, just so you can really wrap your head around the opportunity in pref equity, which is, again, the question was, what can we do to hedge against inflation? Well, you can invest in real estate. Well, what can we do to reduce risk if we're in an uncertain environment? Well, we can be in a more secure position in the capital stack. We can deal structure the deal. We can use financial ingenuity or financial engineering in order to take advantage of being in a better spot. So in these two examples, if you look at this, common equity investors, are going to bring 15 million to the deal, and the debt is going to bring 35 million. So it's a $50 million purchase. So that's kind of the normal, simple structure. Well, when you put together a preferred equity fund, like Von Finch has, we've got a preferred equity fund, and investors have an ability to invest in that preferred equity fund. Now, we can go out to that same deal and we can say, hey, let's add $5 million of preferred equity. And instead of receiving, remember the example, instead of receiving a 10 to a 14% return, maybe we can receive an 11% return. So we're in a good position here, but the biggest benefit of preferred equity is right here. So we're really trading off upside potential for this protection. And it's right here that this project example that we're talking about could lose $10 million of value. 20% of the property value could be lost, and the preferred equity would be secure, would not lose any of its principal. Now, during the Great Recession, depending on where you're at in some of the sand states like California and Arizona, we saw drawdowns of 40%, or we saw properties lose value of 40%. That was a real estate led recession. We're not in a real estate led recession, can't predict the future, but the likelihood of a 20% drawdown or 20% loss is much lower. And so when you can be in that preferred position, it's a great way to invest, to really hedge against inflation and to be in a more secure position at the same time. So great question. Great question, YH. I think it's important to be thinking about that, because too many people I know are saying to themselves, I'm going to sit on the sideline. And whenever you're sitting on the sideline, you're choosing to invest in cash, and choosing to invest in cash today offers a negative 8 to 15% rate of return per year. And nobody wants to invest for a negative rate of return. So it might make sense to look for something like that.
And just a quick question, Steven, so on what you just showed on your preferred equity. So your investors in that, they actually invest in a fund of your deals, right? So your preferred equity, considering it's a kind of a fixed return, preferred return of a fixed percentage, let's say, it's actually distributed across multiple deals. Is that correct?
That is exactly correct. So investors have the ability to distribute that capital over, depending on the size of the fund, between 4 to 6 or 4 to 8 different deals.
I
So
see.
all the capital will be pooled together, and then we'll go out and place the capital. For example, the preferred return will depend on when you get involved in the fund. If you get involved in the fund early, you'll get a little bit of a bonus, a benefit. If you get involved in the fund late, it's lower. But let's say we go out and we're going to go and get a deal under contract with a 12 or 13% preferred equity, and then we're going to pay the investors an 11%, and then Von Finch will make 1 or 2% on that for doing all the work to go out and put that equity. But the reason we like it is because we want to place our own capital in a more secure position. And that is helpful at today's time in the market.
Okay, so we're just right at our time. It's been really great, Steven. Thanks for guiding us through the 5 success principles of investor mindset, your preferred equity structure as well, and everything else. So once again, like the best way for people to reach to you is it your website?
Yeah, absolutely. Well,
yeah.
Head over to vonfinch.com/invest to get involved. Or of course, you can go to investormindset.com to learn a little bit more about, what we're doing and, actually register to invest. So here's a couple of those resources that I talked about. Just to keep it simple, we'll keep it with the investor mindset links, but, take a look around. We've got a lot of information out there on the internet, and that can be a great way to get to know us and potentially build a relationship. We'd love to work with up and comers who are investors or up and comers who are fund managers. So, get in touch. Appreciate the opportunity to share some value here, you guys.
Perfect. Thank you so much. And thanks to everyone for joining here today. Have a good night.